Today, we're going to be talking about the five best stocks to run the wheel strategy on. And if you're wondering what the heck is the wheel strategy, you're in the right place. We're going to go through what exactly the wheel strategy is, and then we'll get into the five stocks that I think are fantastic stocks to begin doing the wheel strategy with. Okay, first off, the wheel strategy is unique in that it has the ability to have a triple income architecture to the trade. You first off get premium paid to you when you sell the covered call or if you sell the cash secured put. Most often, people will start with a cash secured put. So you get that premium up front. You also get the call premium when you get assigned the shares, and then you're able to sell that call premium above your cost basis, capture some of that premium. And then also, too, you're able to get equity appreciation. And then also, I guess you could add on top of this as well if you're able to get some dividends off of that stock that you're going to be investing in. Full disclosure on the five stocks that we'll be covering today, they're not really the best for dividends. If you are doing the wheel strategy on a stock that does have dividends, obviously you're going to get paid those when you're holding the shares. You don't get paid dividends when you hold options. So if you have a short put or a short call or even a long call on an underlying stock, you don't get paid dividends. You only get paid dividends if you own the stock outright. So, guys, if you would like to ask a comment or have anything that you would like to share, drop it in the comments there on YouTube, and that will bring it up here for me, and then I can ask it or answer it there for you. Okay, so the wheel strategy is a very effective methodology of generating income from your portfolio. And we've got it right there. This is the mechanics of that cycle. So, first off, the most often thing you will do when you begin doing the wheel strategy is that you will sell the cash secured put. You're going to be picking a stock. And again, today we're going to go through five excellent stocks to begin doing the wheel strategy on in terms of selecting the stock and getting in on a particular trade. Let's hold off on that until we get further in and get some more definitions on what exactly is the wheel strategy. So, first off, you're going to sell an out of the money cash secured put that generates income immediately off of your cash, and you're able to put that cash and get interest on that as well too. So you get the income from interest and also the income from the premium from selling that cash you could put up front. And you should be selling that out of the money. You're going to want to try and sell at about delta 20 to 25. If you're very conservative and do not want to be assigned the shares, then you want to be selling delta 10. However, if you don't want to get assigned the shares and you're scared and you're wanting to sell delta 10, maybe your better option is just not to do the wheel strategy, because you'll find the premium that you get paid over time is not worth the risk that you're taking on. So delta 10 may not be your best strategy going forward. Delta 20, delta 25 is a better sweet spot for you. Now, if you're wondering what delta means, that's a measurement on the underlying on the stock and on the option that's being traded for it. Delta 25 would mean that for every dollar of movement from the underlying stock, the option that you're trading is going to move in price by 25 cents, hence delta 25. Anyway, it's just a measurement. And if you know that if you're doing delta 25, that you are out of the money, that's going to be an out of the money option. And so that makes sure that you're going to be in a nice safety zone. So you have a lot of movement for the stock, but then also too, you're going to get paid some pretty good premium on that. The next part is that you're going to get assigned the shares. If you sell delta 25 or delta 30, over time, you are going to be assigned that stock. And that's okay. You are trading stocks that you do want to get into. And when we get into the five stocks that I think are really good candidates to be doing the wheel strategy for, you will see that these are stocks that, yes, like fundamentally, you want to be owning these shares. You want to be owning these companies, and you're using the wheel strategy to generate additional income from those stocks. Once you do get assigned the shares, then you also want to begin selling covered calls. You're able to secure the call by holding the underlying stock. And you're able to sell again, delta 25, delta 20, and that will mean you're selling calls that are out of the money. So after those shares get taken away from you, then you just start all over again. You've got cash to begin with, and then you start selling cash secured puts, and the cycle just keeps on going and going. And over time, the hope is by owning great underlying companies, your portfolio is able to go up in value and you're able to generate additional income even more as you grow your portfolio. If you have questions, just drop them in the comments there. They'll pop up here on my YouTube stream, and then I'm able to bring them up onto the live stream, answer them for you, and we can get a bit of a conversation going there. Okay, let's keep on going. Next one here. So, engineering the fuel selection criteria. We're going to get into those 5 top stocks. You'll see as we go through those 5 stocks, I'm pretty excited to go through them. I've handpicked some really good ones, and I love the AI play that each one brings to the table. So, we'll get into that too. First off, you want to have high options liquidity as we're going to be coming in and out with the wheel strategy on those stocks. We do want to have a high ability to roll the options if we so choose to do so, but also we want to have good tight bid and ask spreads between the ask and the bid on the option. And this makes sure that we're able to get the most that we can for the risk that we are taking on. Number two is you're happy to own mandate. Don't be doing the wheel strategy on stocks that you don't want to own. If you're getting tempted to get into stocks that you don't truly want to own, maybe use like a put credit spread so you have a hedge on the bottom so that if you do get into real trouble and that stock absolutely collapses, you can at least limit your losses and move on. But you want to be able to own the stock. And so number two is happy to own mandate. You really do. You don't mind being assigned the shares and having to carry those for a while. Number four is capital efficiency. Share prices allowing for portfolio diversification without requiring institutional capital. So we want to be able to get efficient return on our risk and that we're able to make sure that we're getting a good return on our capital. We want to be targeting about 1% per month to 2% per month. And if that sounds unrealistic, well, 1% a month is just 12% per year and 2% is just 24% per year. I think that's very realistic when you're doing option trading, especially with the amount of homework and the amount of work that we're putting into this. We want to make sure that we're getting a good return on our investment. Number three is the IV sweet spot. That's the volatility sweet spot. We don't want to be trading too many stocks like Procter and Gamble, Coca-Cola, Johnson and Johnson, the quote unquote boomer stocks. We don't want to have too many of those because we're just not going to be getting a lot of premium and return on the amount of capital that we're having to put in reserve. Now, that being said, I don't think we want to be jumping into the AMCs and the GameStop or those high meme stocks because as a stock becomes more like a meme stock, it gets more difficult to value that stock. It becomes more sentiment and driven by emotion and the next tweet that comes out by who knows what. We want to make sure that we have enough volatility to make it worth our while, but we don't want to go extreme. So we're trying to find that sweet spot. Speaking of that sweet spot, here's a diagram of those meme trap stocks at the top where there's no fundamentals. There's nothing to say that the company is overvalued or undervalued. And it's just implied volatility that's been mandated by the social media accounts that are most influential at that time. Those are not the ones that we want to be a part of. Also, on the other side, we don't want to have too many boomer stocks in our portfolio. One or two is okay. Okay, if you're with CFU, Cashflow University, you've seen how we did one trade on Coca-Cola just recently, and we're currently in Procter and Gamble. But those are just one or two here and there. By and large, most of the time, we're doing stuff like Palantir, Amazon, Apple, Meta, and trading those. I find those to be in the optimal zone. Something like Meta, where it's like, okay, this is a real stock. We can easily value it. We can see that they're trying to do investment. They have capital expenditures. They have revenues. They have a moat, and they're able to make a return on investment for investors. And they are at the edge of, or like the frontier edge, if you will, of what's the next best investment to be doing. Is that AI? I think it is. And so it's nice to see these guys pushing the envelope. That's where we want to be investing. Okay, let's get into the top 5 stocks. The number one that I want to talk about here today is Netflix. So Netflix just went through a 10-for-1 split. They used to be priced at around $1,000 per share. That made it a little difficult to be doing the wheel strategy on there. It's just too much capital is being required. Now, after their 10-for-1 split, we have a great ability. It's more liquid to do one contract. We'd have to have roughly $10,000 to be trading Netflix. We got clarity that they are not going to be going forward with the Warner Brothers deal. I think that's healthy for the industry and for Netflix. It's good for them to have some competition. One thing I did like when they were going through that regulatory battle, they mentioned that their highest competitor or their next best competitor isn't Hollywood. Influencers like Mr. Beast are making more of an impact on movies and viewing habits than any other single streaming service. They said that YouTube is the biggest threat to the industry and also to Netflix. If you have kids, you can see how influential YouTube is because my kids just want to watch YouTube. They don't care about Netflix. They don't care about the Disney shows. They want to watch the YouTube. I don't really get it. They love it. They just go from one to the next and they like that. Anyways, Netflix is a great company to be doing the wheel strategy on. They also have a good moat. We just talked about how they're being threatened by YouTube, but almost every household in America will have a Netflix subscription. They might cancel it, but they're always going to come back, especially if a new show comes out. They got the new Stranger Things prequel is being done in the pipeline, so that's going to be coming out soon. And we just went through Squid Games. There's going to be more Squid Games coming out. It's a good streaming service. It's kind of the bare bone. It's the granddaddy of them all. What I like about them too is this article came out that Netflix is all in on leveraging generative AI on its streaming platform. They are using AI for making content, which is pretty cool, special effects and making backgrounds. And who knows, maybe they'll get Brad Pitt to be in every single movie now because they can license his rights, so to speak, and get him to be in all this new AI stuff. At the same time, too, they can use AI to procure and present to you better content that's going to be more to your liking. Netflix has always got an algorithm, but maybe they can tweak and improve that algorithm and have better content for you that's tailored to your needs and to your wants. So I think Netflix is a great play. They got the subscription service coming in. Everyone has it. They've got a good platform there. And plus their stock is trading about $100. And you've seen us trade this recently. We did a call debit spread on Netflix that became very profitable for us. And then just recently, I think yesterday or today, we entered in on a put credit spread as well on Netflix. Yeah, it was yesterday. And so I want to keep on trading Netflix and generating some income off of that. So if you're going to jump in on Netflix, just let me pull up the chart here and then we can get some charting going. And you can see the platform that I use for that, which is probably the same platform that you use because everyone that I know uses TradingView. So I'm just going to try and zoom in here. No, that looks horrible, doesn't it? Oh, you can see my entire background now. That's kind of weird. Come on, where's the next best thing for camera? All right, there we go. That's the one I was looking for. I'll just center myself. There we are. Again, guys, if you have questions, drop them in the comments. No problem. So Netflix. See how I told you that I thought Warner Brothers pulling out the Warner Brothers deal was a good idea. That was that when they announced that, and look at that nice jump popped up, got them right back above their 50-day moving average. I need to keep it on that screen. Please don't mind me looking over here, but that's where my monitor is for it, and the camera's over here. And then they got a nice breakup structure here, so they had a nice down pullback off of that profit taking from that recent announcement on Warner Brothers. They had a potential here for a cup and handle if they had pulled back down to here, but no, they just kept on breaking out, broke the structure, and they're making a run for their 200-day moving average there. They might see some resistance as they get into this nice supply zone that's marked up here in the red. So as they come across that 200-day moving average, they could run into that and then they'll have to pull back a bit there. But so far, it is a lot of green lights here for Netflix to the upside. If you're entering this as a cash secured put, this is where I would be wanting to sell that cash secured put. You'd be coming in at around $92. When we did our PCS or our put credit spread this last week, we put it in at 94. So we're a little more tight. We wanted this support level here. If you're new to trading options, maybe you want to come in at around the 92 area for Netflix. Now, the next natural question is, well, what if it goes against you? What if this doesn't play out the way that you want? And that's one of the best things that we do at Cashflow University is show you how we manage risk. Recently in our Discord, I show you how every single day I come in, you open up the portfolio, I give the market a time to adjust, and then step through every single position, go through every single position, and what's the plan for each one. If you're interested in doing a lot of risk management, CFU is the place to be. I show you step by step how I manage every trade that goes against me. And the ones that are working for me, I just let them do their thing. I have a limit order to get out. If you want to learn how to do really good risk management, CFU is really good for that. The lessons that you'll learn there are likely worth way more than your subscription fees. I would start selling covered calls at about the 108 or the 110 easily. So if you already have 100 shares plus on Netflix, this is where I would love to be selling into that supply zone there. We've covered Netflix, good AI play, really good chart. It's got a lot of upside. That's Netflix. Let's move on to the next company. Do you guys want to take a bet on what it is? I have a lot of AI themes in here, so don't be surprised if it's just an AI chock-a-block. That's an error loading the image. Okay, next one here is Nvidia. Okay, so Nvidia is the darling of AI. So if you love ChatGPT, if you think that's what created the whole wave of AI adoption, you are correct. However, NVIDIA is the power behind making this happen today. Yes, we do have some competition coming in from AMD, Broadcom, Tesla with their A chips, like A4, 5, and 6. NVIDIA really is the player. They're the ones that are setting the stage. They have not only the hardware moat, but they also have the software moat. Over the last 10, 15 years, they have been developing the CUDA software development kit for using their chips. And they've really established a moat where if you want to be using GPUs and AI chips, if you want to be using machine learning and artificial intelligence, you have to be jumping in with NVIDIA chips and the CUDA software. And once you're in, it's very difficult to get out. It's their strongest moat that they have. Now, that being said, the current chip being used by the industry is called the Blackwell chip. They have already introduced the Vera Rubin super chip, and I do have a picture of that. This is the Vera Rubin server rack. So if you say, hey, I'd really like to get my hands on a Vera Rubin chip, it's not something you can just go out there and get like on a NVIDIA GeForce 4090 or 5090. It's not the way they really sell this. It looks like a fridge. When you buy a Vera Rubin server rack, you get 72 Vera Rubin chips. Now, Vera is the CPU and Rubin is the GPU. They put it together to say it's a Vera Rubin. And it consumes the equivalent of 100 to 150 US homes. That one rack right there will consume the equivalent of 100 to 150 US homes. There's variance because sometimes it's on full demand and it's sucking up power and producing a ton of heat, or it's on the stable 100 equivalent of a home. This thing sucks power. I would love to see one of these things hooked up, but what are the cable sizes that are coming into this thing? And what is the cooling looking like when this thing is ejecting all the heat that it produces? So let's bring up the NVIDIA chart and we can see how it is starting to consolidate. And there's a good opportunity to jump in on NVIDIA. Okay, so this is NVIDIA. This is the 1-day chart, and this is going back till August of last year. And that is just a bunch of chop. Now, it looks horrible because I've got a little bit zoomed in. So we'll bring it back together a little bit. Sorry, my earpiece is going out. So you can see a little bit of signal to it. You can see how it had its run. It goes back even further, rip and tear on NVIDIA. September 2022, and then boom, it started making that unstoppable run of the revolution of AI. They got a stock split June 24. It just kept on riding and extending the leadership that they had. But now they're topped out here. Back in October of last year, they hit their high at around $210. Since then, it's been a lot of just consolidation here. As it goes sideways, you could put a nice iron condor on NVIDIA or use this as an opportunity to jump in a little late if you're to the game, but you could be selling some cash secured puts. Now, I don't have this blue line here, which is a demand zone. I don't have that, but we do have the ability here to zoom in and see that the 200-day moving average, which is the blue line here, and the 50-day moving average are starting to consolidate here. And that's bringing normalcy, and price discovery has been more or less taken into account, and we're going sideways now. This is a good opportunity to be selling a cash secured put. I would want to be down here in the 175, 176 range. So you're getting a lot of that support zone in through here. But I think you could easily make a case for maybe the 180. That would be taking advantage of the 200-day moving average here. And so you'd want to say if you're going to break below that, that's when I would want to be buying in. So when you're doing cash secured put with the wheeling strategy, yes, you do want to take into account that I don't want to get assigned. It's kind of a mixed bag. You do want to get assigned. So going up tight against here, that's okay. So that gives you another reason why you want to be selling Delta 25, Delta 30 on some of these options. Don't worry about that, right? Like if you're in the game to avoid assignment, wheel strategy is not for you. You do want to get assigned if you are doing the wheel strategy. So in here, that's what I would be selling is about the 180 cash secure put on that one and letting it go. And then if I got the call assigned to me, I would definitely be taking advantage of these supply zones. The supply zone, that's where institutions are very willing to let go of their shares and take cash instead. Between 194 and 200 is where you're going to be seeing a lot of institutions selling. As Nvidia starts to rise through here, you'd be wanting to sell covered calls on here. If you already have an established position on Nvidia, that's another indicator for you to take into account that, yeah, okay, I'm a long term holder of Nvidia. So maybe when it gets into that supply zone, if you don't want to lose your shares, maybe start selling Delta 10 when you get into these supply zones. That's an opportunity for you to sell that. So if it was Delta 10, you could probably get some of these really nice high numbers like in the 210 to 212 in that area there. And again, that's just for guys who have shares, want to keep their shares, but don't mind getting a little bit of income off their NVIDIA position. But if you are getting assigned and you're in the wheel strategy mindset, you definitely want to be selling your covered calls a little tighter to the shares so that they do get called away from you. Okay, let's move on. Next stock. Oh, Tesla. This is my favorite stock. Like, get going already, Elon. Like, you've got a great platform that you're doing here. Although lately you have been having some misses on your delivery, your Chinese sales or sales in China, those have been down 16% year over year. You're not doing so hot. You really got hurt on the brand when you went to the White House and started to just rip apart the government establishment. And I don't know if that was good for Tesla. We can make some arguments whether it was good or bad for the United States government. Many of you know that I'm Canadian, so I don't feel it is my place to make my opinion known on all those things. So I'll just skip that. But from a Tesla standpoint, they're an incredible company when Elon Musk is running and doing his shtick. When he's doing his strength and when he's leaning into his Asperger's syndrome that he has, when he's leaning into his intense urgency on timelines, and when he's leaning into his let's simplify, reduce the supply chain. In fact, let's replace the supply chain and let's make amazing products. That's when Elon Musk is at his best. He loves autonomy, he loves automation, and that's always been a mantra that he's been doing at Tesla. They've always, almost their detriment, been doing a lot of automation. He has admitted that he's done too much automation at times when they were doing their in 2018 when they were doing the Tesla Model 3 when they were trying to make this 5,000 vehicles a week. Now he's decided that he's going to get rid of the Model S, get rid of the Model X. Then they're going to repurpose those production plants to now make the Optimus robot. Okay, that's great. So we're going to do Optimus robot. We're going to do Cyber Taxi, and we're going to keep the Model 3. We're going to keep the Model Y. And please get rid of the Cybertruck. That thing is like it's like a trapezoid on wheels. Get rid of that thing and repurpose that production line. I know you do use the Cybertruck as a means to get stainless steel into your production so that you can also use that with the rockets with SpaceX, but let's get rid of that Cybertruck. That is a dongle, a skin tag. Throw that thing away. Nobody likes it. So let's get back into making really good cars. I get it with the Optimus robot. Let's get going on some Optimus robot. That's amazing. There's a really good addressable market there if we get into that. Assembly plants, doing jobs that people just don't want to do, doing it 24 hours around the clock. I think we can all imagine just how useful having robot doing work for us. I can't wait to buy one. When they come out, I'm looking for dimes under the sofa cushion so I can buy one of these things because I want that thing to come into my home and do all the chores. Laundry, cleaning the house, mowing my lawn, shoveling my snow off of my driveway, going over to my parents' house and taking care of them. They're getting into the senior years of their life, but taking care of them, whatever it takes. There's unlimited opportunity for that Optimus robot. But let's get going and let's get that thing deployed. Now with the cyber taxi, I think there's a really good opportunity. Gen Z and younger, they don't want to own cars. They just want to jump into a taxi, take me to my destination. And hey, you can do it for even less money than what I'm going to be buying. Fantastic. No car payments, no insurance payments. I don't have to worry about maintenance. Like kids these days, they don't know how to do oil changes. And you know what? That's okay. Gone are those days. And let's move forward with electric vehicles and making the world a better place. Electric vehicles, if you don't have one, they are amazing. I have one myself, and it really helps reduce the cost to commute and getting around town. If you go on a road trip, I still think you want to have a gas powered vehicle. It's a little more convenient with that. But over time, they will get ultimately replaced. Okay, let's jump into the chart for Tesla. As much as I've been downplaying and kind of speaking bad and ill of Tesla, they are the number one holding that I have in my portfolio. So yeah. The 2 biggest holdings I have is Coin and number 2, Tesla. So, yeah, I don't mind a little beta. Volatility is your friend, in my opinion. I think it gives you opportunity to get great assets at a fair price and then take advantage. Okay, let's get into some Tesla charting here. So here we go. Here's Tesla. I'm going to make it a little bit bigger for you again. Yeah, that's the button for it. Okay, I know my head's right in the way. Can I do it now? I don't think I can. Can I move you? No, no, I can only maximize. Anyways, I guess I gotta do that after. But what we can do is just move it into more of the area that we're concerned about. When you look at this Tesla chart, there's 2 things that come to mind. It's coming down. It's got a really bad downtrend. It's coming back down to where it found support back in August of last year. So we're back and we crossed the 50-day moving average, crossed below the 200-day moving average. That is the death cross. Not a good sign. So looking at this, you're going to be thinking this is a good bearish chart and setup. In the days ahead, we're likely going to see more negative news and more negative downtrend on Tesla. They have earnings coming out on April 22nd. So just something to keep in mind there. See how it's going to do. It's got 38 cents on 22 billion. 45 cents is what they had. No, they got 50 cents last time on 24 billion. So we're forecasting a little less revenue and a little less earnings. So good opportunity for Tesla to beat that if they can bring that together. But then also too, we're down right at a demand zone too. So we should be able to see that this is going to be a really good area for support, that you're not going to be seeing much selling past this point. And case in point, of the last 4 days, we've had 3 days of buying in green candles there. If you're with CFU, you know that today we did enter into a put credit spread with Tesla. We got in down at this area here. So this is going to be the next zone of support. We got support zone number 1 here. There's evidence of demand down here. So if it gets down to here, we're going to see a lot of buying. If it gets down into the below 300 area, so the 285 up to the 295, we're going to be seeing a lot of buying there too. We should be able to see some good support. If it breaks that support area, she's going to fall down to around the 225 mark. I hope we don't get down there. That would be disastrous. I have to start marking some of these charts and saying, like, this is the point where I go try and find Elon and talk with him and say, dude, we got to get this fixed. So if I was getting in now, one of the benefits of Tesla, because of the beta, because of the value of the underlying stock, you do get great value for the risk that you're taking on here. I would definitely look at this one here. This is going to be your 288. I go 290 on the cash secured put on this one, or get into the 300s. I would look at this 330. With the wheeling strategy, you don't mind getting assigned the shares. Buying in Tesla at 330, that's a really good mark. I was watching influencers where they were saying down and around this area, this was a good time to buy. As it broke below 400, that was a good time to buy. And as it broke below the 350s, it was a good time to buy. We're in that zone right now where we should be buying Tesla and establishing or strengthening our position. If you want to be getting in a little bit more defense there, or like a buy the dip even more kind of an area, 330 is a good mark too. So we would sell that cash secured put. Tesla goes down below that. Let's say you get assigned the shares. It finds more support down here at the 285 area. And then we can start selling covered calls above our cost basis and have those shares taken away from us. For providing this service to Tesla investors and Tesla speculators, That's where we're getting our premium, and that's where we're getting paid to take on this risk and to have exposure to Tesla. All right. Pretty good. All right. Let's keep going. Let's get on to our next stock. Oh, yeah. I forgot to mention this is the current book that I'm listening to on Audible. Walter Isaac's biography of Elon Musk. Crazy dude, man. Okay, Palantir. So take this one with a grain of salt. It has not been doing very well of late. This borders on meme stock volatility. So of the five, this is the one I would least recommend, but it does make the mark in terms of an AI play. It's one of the best software applications of AI. And funny enough, they're running into the same problem that a lot of other software companies are running into. They do have some of the best growth. They've been able to get a lot of commercial contracts. They have great partnerships. They have a really high retention rate. Once companies get in bed with Palantir and start utilizing their systems, they are very likely to continue to use them and adopt and look at ways in which they can expand their adoption of Palantir. So, it's a great software company to own. They're not available for consumers in terms of their solutions, but government and large corporations love to buy into them and establish contracts with them. Because it's so volatile, they're up at the 210s. I've got the chart here on the other side, ready to bring it over when we decide to look at the Palantir chart. They're up at the 210 and now they're down to 128. They've lost about $90 in stock value. Really good opportunity to be buying in on there right now. I wanted to bring up this next one here. The next challenge that they're seeing. So I use ChatGPT to kind of give me this. Hey, I want to have this image of Claude and Anthropic versus Palantir. If you're watching the news this week, Claude came out with this new cybersecurity threat where they're able to go through a model that Claude and Anthropic are able to go in secure and find out loopholes of current software in Mac, OS, Windows, servers, and SQL databases. They're able to more efficiently find security loopholes and security threats that could be taken advantage of by bad actors. And Anthropic is going to sell this, and they're going to try and be a good actor, but they're going to try and help those that are wanting to secure their solutions, such as Apple with iOS and their iPhone and Android. And this is going to be a threat to Palantir. Is there any stop to what Claude can't do? Is there any stop to what the Anthropic suite of solutions is going to be prevented from? It looks like anything you throw at Claude and Anthropic, they're able to solve it and actually deliver it. And it's beginning to become a threat to Palantir. And that's what happened this week with Palantir. So you see this massive drop here. This is the threat of Anthropic hitting the tape for Palantir. So if Anthropic's able to develop solutions and replicate and do a better job than Palantir, they're going to take over and Palantir is going to suffer the same fate as other software providers such as ServiceNow and Microsoft, other providers. That's I'm basing my bearish thesis I have on right now for Microsoft on the ability for these new AI models and solutions and coding to replace anything that Microsoft has been doing. It's funny how for a while they were thinking, hey, Microsoft's going to be using AI to develop better and better code. Well, now it's almost to the point now where the threat now is the ability for other companies to make and produce better code than they could before. So here goes Palantir. They're suffering from the Anthropic effect. Hopefully they can withstand that and say, no, we have a moat that's very well established. Anthropic and Claude are not able to replicate and take down our moat. Where does it stop? What's the moat that stops AI from taking over? I'm trying to actually embrace it and go forward with it. These are my top positions that I have. Nvidia is at the very top. I have Bitcoin there at the very top too. Are they going to be able to take out Bitcoin or the equivalent? Can they make a better Bitcoin than Satoshi Nakamoto? I don't know. We'll find that out. But then Tesla is embracing AI. They're being able to drive and deliver and robots and space. Palantirs, they're going to be having some problem with their software side of focus. TSM and ASML, they're the ones producing the chips. Google's got the database and the warehouse with umpteen established data sets already. So they have the best data available and they have a really good model with Gemini and they also have their own processors with TPUs. Micron makes the HBM memory. And this is NDA. This is Neptune Digital Assets. Why they're attractive is they're more of a crypto company, but they also have straight up private investments in SpaceX and also with XAI. So if you're looking for some exposure to those two companies that are currently privately held, Neptune Digital Assets currently has that. Okay, so anyways, that's Palantir. I'm not this is my highest conviction. When I was putting together the PowerPoint presentation for this, they're up in this area here, then they got clobbered with Anthropic there. So maybe we could just take Palantir out of this list. If you did want to trade them, there's no demand zones below here. That's not a good sign on a chart. It's all just been supply up in here, right? Supply, supply, supply. Institutions are very willing to sell Palantir, and there's just no demand below here. So it's not a good sign for Palantir. Hopefully they'll be able to establish a base here. This could be the beginning of one here. So if you are risk on and you want to take a bet with Palantir, maybe you want to sell the 120 or the 110. Full disclosure, I do have shares in Palantir. I do like them and they're really good from certain standpoints, but for a red flag with the Anthropic threat. All right, let's come back to our stocks. Let's go full screen. Okay, the other one is Apple. Yeah, so this is actually an interesting one. I like this. They have been very slow to jump into the AI revolution. And I think at the start, it was seen as that's a weakness. You're not getting in, you're falling behind. Everyone else from the Mag 7 is embracing this and doing a much better job. Why can't you get in? You have iPhone. Why can't you get a better solution there? You have Siri, which is a natural onboard or on ramp for AI. Why can't you deliver this? You have laptops, you have all of the incumbent hardware, you have access to amazing capital markets. You have like 160 billion in cash. What's the holdup here? I think they're waiting and they could actually be the AI dark horse. They haven't been threatened, so that's a good start for them. They're hearing the threat, but in terms of a direct threat, they haven't been hit yet. They've been able to keep their moat, keep their pricing power. People are still paying top dollar for the iPhone 17, for their Macs. And what the hell happened with this? OpenClaw. If you don't know what OpenClaw is, that's your homework for the weekend. Find out about OpenClaw. It's an AI solution. It's very agentic. It's open source and it can handle AI workloads for you and on your behalf. It can schedule jobs at night to run for you. It has a much better ability to persist and stay in memory and remember who you are and not have that kind of session overflow that you might experience with ChatGPT. It's very much able to remember you and be your companion. I use this to go through my email. I get like 50, 100, 200 emails a day. Go through my email and bring up the top 4 or 5 emails I need to pay attention to today or organize my calendar. I'll tell it my requirements and it'll do that for me. It's mine, it's personal. OpenClaw is amazing. How does this play into Apple? It runs amazingly well on the Mac Mini. So you don't find Mac Minis anywhere is because everyone's going out to the Apple store, to Costco, wherever they can go to buy this. It's because the M5 and M4 chip, and possibly even, yeah, like M3 chip, etc., they all run this thing especially good. It works on here because the memory inside the Mac hardware is unified. So if you have a 16 gigabyte Mac Mini or a 32 gigabyte Mac Mini or a 64 gigabyte Mac Mini, the CPU, the GPU, all of that, they share that memory. And so when you have a 64 gigabyte Mac Mini, it's able to load the language models right up into the RAM and use it with the GPU. It's a strategic. This was done ahead of its time when they brought this unified memory architecture together. And now all the resources that are on the Mac Mini can share that. And so it makes it the perfect fit for OpenClaw and for AI workloads. And now you can give it agents and different skill sets and ability, and it can go and run these for you. And it's incredible what it can do. You can tap into APIs for you. It's insane. Write code, etc. And it's all private and it's on your Mac Mini. So that's where I'm thinking Apple could be the dark horse when it comes to this AI revolution. And they already have to begin partnering with Google and say, hey, you know what? Your Gemini model is really good. Let's partner together on that. We can improve it. I do think it's a weird partnership though, because you have The iPhone and Android, they've always been arch rivals. So it's going to be interesting to see how those two play together. But I think going forward, I think Apple really could be the AI dark horse in this whole scenario. I base it on the thesis that they're front and center, they're Mag 7, one of the biggest companies, and they still haven't been threatened. Microsoft has been threatened by Anthropic and these agents that can reproduce code better than them. But it's interesting to see who's being hit, who's being threatened, and Apple's coming through a little unscathed. And they always have the resources where they could pick up the winner, partner with the winner. They're all going to want to partner with Apple. And then they can jump in with really good hardware and have a complete holistic solution. So I really think Apple's going to be one of those dark horses going forward there for it. So that being said, let's jump into the Apple chart. My Apple chart. I've looked at this for quite a while. It's fun to see where I was thinking. Oh, there we go. Okay, Apple. These nice ladders here. This is support and resistance zones. This was the last resistance, and it's been able to hold steady since then. So you can see where I drew it off, then I stopped. So Apple's doing really good. It found good support and good demand. So it's right in that demand zone there, just at the end of March there. It's been able to pop up, it has a change of character here. It's popping up. It's above the 200-day moving average. It's trading along the 50-day moving average. When I look at this real quick, it's a great chart, very easy to read. It's got supply up here at the 275 zone. It has demand down here. Institutions, pensions, etc., are willing to pay the ask when it gets down into the 245, 247 range. That would be a really good area to be doing a cash secured put. That's trading right in this neutral area. If you wanted to put an iron condor around Apple, that would also work. You could put the call credit spread up here, put credit spread down here, and use this 50-day moving average as your neutral place. It's here right now. So this is a really good trade. It's got earnings on April 30th. So I would want to go to May 15th at the very earliest. So I'd want to be behind earnings and go because you want to be in front of earnings. But I guess you could do April 24th, but I don't know what kind of premiums you're going to get for that because it's before earnings. April 30th, you'll get a little bit better. Friday, May 1st, you'll get really good premiums there. And then I would do the May 15th, or if I had to, June 4th, third Friday in June 19th. June 19th, you could do it there too. In the theme of what we're talking about today with wheeling Apple, I would do this. I would put the 245, 247 there as my cash secured put, and I would have zero hesitation to be assigned Apple at that price. You're getting a good deal there. We have both a put credit spread and a call credit spread on Apple. They're staggered, so they're not truly an iron condor. However, we are betting a little bit on the neutrality of Apple going forward. So what we have is the 285 and 295, so really high up here for the call credit spread. We have it high up in here so that it's generating just a little bit of income for us with very low risk, and that's in the June timeframe, right around the June 19th. And then we're taking advantage of the week high that was marked here back in December of last year. We marked that off as our call credit spread. Down here below, we're in the 255 range, a little closer up to the money for our put credit spread. And that one goes out to July. So we got a calendar spread. That's a good way to trade Apple right now, I think. Okay, we're just getting ready to finish up for the week. Again, guys, if you have questions or comments, drop them in the comments section and I'll bring them up and we can talk about that. Yeah, this is it here. This is the news article, Apple here. Apple suffers from the Mac Mini popularity as a perfect machine for OpenClaw, an open source digital worker that can put stuff on your computer rather than just working as a chat bot. So if you really like ChatGPT and you love having this partner that you're able to chat with, take a look at OpenClaw. You don't have to have a Mac Mini. You can download it and run it on anything, but it just runs really well on a Mac Mini. You can just download it, try it out, test it. It's open source, give it a run, and you'll be amazed at just how personal it can be. It can tap into ChatGPT and you can start to use that, a more stabilized version of it, and it'll tap into the model and you're able to interface with it and run it and use it. But with Apple, their Mac Mini is the best hardware setup for OpenClaw. Where is the premium? Weekly premium. If on Netflix, you're going to be getting about 2% per week. Let's ignore this slide. This is what I would be inclined to trade on Monday. I took off Palantir. Nvidia, I think it's a really strong candidate to always have exposure to Nvidia. They have the moat. Everyone's buying into silicon and they can't buy enough of this. They have the Vera Rubin chip coming out at the end of 2026 being delivered, and they're going to do a fantastic rollout of that. Nvidia's a company you definitely want to have exposure to. Apple, we already talked at length about that and how it's kind of the dark horse play. They're just one news announcement away from a true AI solution that's going to be incredible. And it's likely going to involve Siri to some degree. And I'm excited to see how that goes. Netflix, I think they're the new $100 king with a moat that you can invest in. Everyone understands Netflix and how they operate and the business model that they have. Very easy to understand, very easy to trade. And so I think that's another really good one to trade with. Now, all these stocks we trade all the time at Cashflow University. We have a position on Apple, we have a position on Netflix, and we have a position almost daily on Nvidia. So if you're interested in seeing how we trade these stocks, jump on in into Cashflow University, and you can start with cash good puts and doing the wheel strategy, or you can get into some more elegant trades as well too, such as put credit spreads and iron condors. Let's wrap it up here, guys. If you would like to learn more about Cashflow University, head on over to our website, joincfu.com. We do have 3 different ways in which we provide value and service to the option trading community. Tracking your trades. If you need help tracking your trades, journaling your trades, tracking the performance, which can sometimes be difficult with option trading, go over to cfubook.com and sign up. It's totally free and will help you track your trades effectively and keep track of your portfolio. A cool feature of it is it'll put you head to head against our pro traders, and you can see how you're performing versus our pro traders. Our number one service that we provide is the CFU Discord. That's where we train and teach people how to trade options better. That's where we also give you our share setups and get real-time trade alerts. And if you would just like to trade alongside us, go on over to joincfu.com. You can start for free with our Discord. And then when the time's right for you, you can upgrade to a fully paid member. You get all of our services included, such as tracking your trades, the CFU Discord, and having webinars such as this. Thanks, everyone, for being with us today. We'll talk to you later.